I'm going to show you how to predict the future in price movement with a high probability in this episode, utilizing XRP, Litecoin, and Bitcoin Cash analysis so that you can see this 3 EMA matrix. Very basic. You don't have to be a trader. You can be a hodler. This honestly might be just as profitable for hodlers as it is for traders because using it on larger timeframes is a lot more powerful. However, you can use the same 3 EMA matrix to boil it down to the small timeframes to better time your moves and have a more profitable crypto journey. Let's get it. Y'all are probably over there saying, Tim, that's quite an intro. We're going to literally tell the future. Yeah, bitches, we are. So sorry, I don't usually, for new viewers, I don't curse very much on this channel. All right, so, but that was a big intro, but I'm serious. So watch this. I'm going to use a 3 EMA matrix. Right now, you technically only have 2. I don't want to delete this because it took me a while to draw it. So just ignore this one that I'm moving around. I have drawn this on for my personal trading experience. All right, because I'm using it. And that one and the 8-hour 200 EMA. So ignore this. So focus on the purple line and the orange line. The purple line is the 89 EMA, which moves faster than the 200 EMA, which is the orange one. All right. Later in the video, so you should stay tuned for the whole thing. So I'm going to apply the 3 EMA trick a little later, but you have to understand the first 2 before we get to the third. The red is the 10. So even if I switch timeframes like to the 12-hour from the 5-day, so I'm on the 12-hour now, this is still, the red line is still the 10 EMA. It's just of the 12-hour chart. So I'm going to go back to the 5-day chart for XRP, and I'm going to remove the 10. But the rest of the video, the red is the 10, the orange is the 200. So those are the fastest and the slowest, and the purple, the odd duck, is the 89. So what we can say here is, if you have a large time frame, like the 2-day, the 5-day, the week, right? So let's go to the week. If you see the purple below the orange, which in this case it's not, right? But there are other large time frames outside the week. The general rule is, if you have a large time frame where the purple is below the orange on a big time frame, any move up is not sustainable. It will come back down either to the purple or go to the orange even lower and give a threat that the purple crosses down. You can literally predict the future on a run. All right, so here it didn't cross. So technically, according to this, on the weekly, any move up, even during this downturn, it could have been sustained. However, the weekly is not the only large time frame. You also have the 5-day. The 5-day chart is a large time frame, and here I can tell you that before this point here where it crossed, any move up above the orange line, it came back down to the orange line or lower. It is not sustainable, and you can tell the future that rally, wherever it happened, on all of these assets, is not sustainable, that it'll come back down. So let's put on price. Crazy. So you see where I drew that orange line, or that pink line? See this pink line? Right where it crossed, right? Because here it almost crossed, but it didn't cross. So any move really strong before this it will come back down with a high probability. It's not 100%, but you have a crystal ball that's like, let's say, right 80% of the time. Hell yeah, I'm using that crystal ball. I'm going to be betting on horse racing. I go, shit, I'll just be a gambler. Because if you have an 80% edge, you're not a gambler. You're the house. You're a badass, right? So do you want to be a badass? Or do you want to be the house, right? So let's be badass house people here. Let's be the house or the casino, right? Let's be the casino. Now, to put this into effect, to be able to trade this effectively knowing it's going to come down, that's a different story. Sometimes you can know it'll come down and it's still hard to trade. However, this gives you the overall edge of what you're looking for, because you could be an idiot with this crystal ball and you could be shorting here, get liquidated, lose all your money, and then just wait and say up here, Tim, it never came back down. Just wait a month. Kablam. And I have that happen all the time when people hear the rules that I apply. It never happened. And then they left crypto. They never came back. They think I'm an idiot. A lot of my fans of veracity lived that moment, but they saw that I was my very strong statement ended up, it only took 45 days to play out, and I got made up for 45 days until what I said was going to happen with a very high certainty actually ended up happening, right, in terms of a sell point. So you could predict the future with this. Now that it's crossed, just look, now that it crossed, see where it crossed, let's take off price. Any move can now be sustained on this time frame. Okay, so to the 2-day. It crossed before. So the 2-day, 5-day, good to go. So any move after this can be sustained. And guess what freaking happened? The next move It's sustained. You had a whale game here, so let's not count that big wick, because honestly, that probably only happened on this one exchange on Poloniex, and it only happened for a few minutes. So, but this was sustained. It didn't come back down, and every low since then has been a higher low. So all you're waiting for is altcoin season, and this will pop. This is ready to go, period, right? All right, so let's apply this to the other assets as well. If I can get rid of some of my drawings here. Okay, and let's go to Litecoin, since it's the I'm a Dash fan, by the way. So if you guys don't know this, I actually like Litecoin and Bitcoin Cash too. And I cover XRP because it's a monetary coin, and in general, I'm a monetary coin fan. So let's do Litecoin. I almost have a feeling its week never crossed either. The purple never crossed. Yeah, so it did a skim play, but the week is not the only large time frame. You also have the 5-day. So the 5-day cross, yes. So if there was any pump before this line, so anywhere in this box, it was not sustained. You can tell the future. Ready? Just made me a freaking liar. Well, technically, it did cross here, actually. So the move was sustainable after it was already correcting. So I guess it didn't make me a liar. That is on the edge, though. This is on the fringes. So you can see here, right as it crossed, that's when that candle went up. That's on the fringes of my rule. Let's take a look at the 2-day. Yeah, the 2-day had already crossed. So this 2-day had already crossed. Therefore, so this move was not sustainable because the 2-day, the purple was below. Here, the 2-day had already crossed, and right at this moment right here is when the 5-day also crossed. Therefore, it's sustainable. Let's get it. Do you see how that happened? So this one is kind of tricky. You would suspect that it would come down a little during this part of the move, but once you saw the 5-day and the 2-day already crossed, you can realize, wait, this doesn't actually have to come down because both are crossed. So all large time frames, the purple's above the orange, even though that happened mid-move down, which is on the fringes of the rule. I won't lie. But you can see how it coordinates pretty well with that, right? It became sustainable halfway through the correction right there at that candle. So, however, let's go to something like the daily chart, takeoff price. Get rid of this, make the screen bigger. So since the daily was below here the whole time, I don't know if there were big moves above, but the daily is a big time frame. So you would know that each of these is unsustainable, right? And this could have gotten tricky because it looked like it wanted to cross. So it looks like there was a pump here. But since the purple was so far below the orange, you would know once you see the move slow down, that's time to get out because it's coming back down here, right? So let's see how that actually played out. Kablam. See that? And do you see how the daily was not crossed here either? So this move, even though it did become sustainable here, it still decided to correct, right? And then the second attempt, it finally stayed above it, which somewhere around here in the circle is when the 5-day and the 2-day also definitively crossed. So let's go to the 2-day. Did it cross within the circle I just made? Yes, it did. Did the 5-day cross? Probably just on the fringes. The 5-day crossed right at the edge. So you see how that works? All right. And you can see how you can boil it down to smaller and smaller time frames. Okay, the daily flipped, the 2-day's not. So the move might not be ready yet, right? But a lot of times it happens right as each of them are doing it. All right, so let's go to Bitcoin Cash. Go to this is a younger asset. We're going to have to use a smaller time frame. So this came out very, very, very late 2021 or 2017. So this is a younger asset. So you actually do have to use smaller moves. So let's try to use the 2-day. All right, so using the 2-day chart, which is the biggest one, I guess, for this asset that you could use since it's so young, you know that any pump here, and any pump in here, it's not sustainable because it's the biggest time frame where you have a decent amount of price history with these EMAs, unlike the weekly, right? So the orange line just came into existence, this year. It just became 200 weeks old, literally this bull run. So you know that any pump in here would be unsustainable because the 2-day, on the 2-day chart, it's the largest time frame which this is applicable. So let's put price on. So you had a pretty dang big pump and actually didn't even get above this line. So That would have been a pretty, that's actually kind of crappy price movement there, but it's typically unsustainable. It didn't sustain. This pump above the orange line. So let's get rid of this again. Come on, Tim, get with it. This pump above the orange line was also not sustainable, right? Because the purple was not crossed up. And guess what happened? When did higher lows start forming and not come crash down? After it crossed. See that? The first higher low that didn't hit these is after the cross. Predicting the future. Hey, I want to take a quick moment here and let new viewers know that over here, you should, if you don't know how to set up a chart and you don't even know what an EMA is and you're clicking around, you probably don't need to be clicking around with your money until you know how to set up a chart. So click that link that was over here, and also take a quick moment before you go, but come back to this video and watch how this plays out. For our returning viewers, hit like, flip your phone vertically, or you get flipped off. Flip your phone or get flipped off. And for new viewers, if you like what you see so far in this episode, hit subscribe, hit that bell. Here's why you should do it. A lot of the ways that I keep people step to step with crypto to help you have a more profitable crypto journey, it's time sensitive. So click the dang bell so it'll help me help you. So let's go get it. All right. All right. I kind of got a little bit into this. Yes, I like trading EMAs a lot. I'm kind of like a range / EMA trader. So I'm not dealing with not thinking about video effects and transitions in this one so much. So I'm getting really into this. Like this is how I trade. I'm an EMA and range trader, right? So when price is boring, so what does range trader even mean? It just means when price is boring, I still know how to make money without big bumps, right? Because price typically is more boring, or it's bearish, which is not boring. If you haven't sold, it's just horrible, right? But in sideways movement, you have to know how to trade ranges, or you're just sitting there on your hands, making no money, right? So anyway, but this helps you trade breakouts, as you can see. All right, so let's go to Dash, see how this is played out, and see if it's ready. Let's use the 5-day chart. Technically, you use the weekly chart too, but let's try the 5-day. I kind of like the 5-day on this. So any pump that started before here would have a strong likelihood of re-hitting this. Now, kind of like Litecoin, it started correcting right as it crossed, and it did sustain. So that really is on the fringes of the rule, but this one followed the rule more perfectly. Since the pump began before it crossed, it has to come back down and check, right? So let's put price back on, and look, this pump started before the purple got above, right? Came back down, and now the purple's above. So is it allowed to pump now? Yes, technically, according to this rule, it is allowed to pump. All right, so what we're going to do now. So the secret sauce isn't over yet. We haven't even added the third one yet. So I want to show you. Here's the last element within this trick, right? But you had to know that part first. The 10 EMA helps you understand when a move is really ready to take off. Sometimes this rule doesn't work because price will just zoom up and never come back down before this trick would be applied. However, when you're scooting across different altcoins, the ones you hold, and you see this, what I'm about to show you here, when you see this applied in terms of timing, it's a good indicator. Hey, I feel much more statistically probable that this is, I feel like the house. I don't feel like a gambler. I don't feel like I'm guessing. I feel that I know this has a very high probability of playing, right? Seeing the future with EMAs with a high probability, right? A crystal ball that's right 80% of the time. I feel like the house. I don't feel like a gambler. So let's dive into it right now. So let's add the 10 EMA. So here's the last little part of the trick. So typically, after you get a move that flies above and comes back to correct, right, and it's been supported, usually what I like to look for are multiple candle closures above the 10 EMA, which is the red one, right, without volatility. I like, so instead of like racing above, so let's say the 10 EMA is like this, like imagine that's the red line, and these are candlesticks, right? Price going up. I don't want to see it race above the 10 EMA like that. Rather, once it comes to support on this orange line, as most of the assets did, I want to see price slowly creep up to the 10 EMA, which might be something, it might be at a downslope, and get above it and stay above it without volatility. And here's the trick. Usually 3 to 4 candle closures without volatility. 3 to 4 is that trick. And if you can catch one on the 4th, because you're just flipping through charts and you see the purple above, it's already corrected, it's already retested, 4 candle closures without volatility, that shit's ready. As long as, remember, you are using both Ethereum and Bitcoin as your primary indicator, or as a standard primary indicator, maybe not the most primary, but a primary indicator within your altcoin, even XRP analysis, right? So if Bitcoin were to tank after you get 4 nice candle closures, weekly candle closures above the 10 EMA, then the rule is going to be broken, because Bitcoin and Ethereum price action is a primary indicator. So I use this trick particularly on the week. So even if you're using the 2-day or the 5-day to look at the purple orange rule, but then you want to time the move better, like when is this really ready to race, because you feel the market might get hot, then flip to the weekly and just look at the 10 and look for small candles, 3 to 4 of them closing. They can wick below, but closing above. So let's take a look at what each of these are doing. I guess we'll start off with Dash. So we know that Dash's purple has crossed above the orange on the 5-day, and it has come back to find support. So what has it done since then? Support, found another support, creeping up slowly to the 10. And the candles, I didn't say have to be green. This red closed above. So this is the 3rd week. Is this 3rd week complete? No. Has it raced up? No. Does this rule apply perfectly? No. However, when you see this, you know you have a high probability. It's not how price moves always. Like if it's Solana and there's news comes out, yeah, it'll just fly above and then come correct later and just not come back down. Sometimes you don't get this setup. So this is one setup. Does every coin have to have the setup? No. The idea here is when you see this setup, then you have the probability. I hope I'm making myself clear, right? However, this is a really common setup. This is a very common way that crypto moves, right? So honestly, at the closure of this week, Dash has done everything it needs to do with the bigger time frames. It's done what it needs to do with the larger EMAs. It's at the end of this week, it meets my rule of 3 weeks above the weekly 10. This shit can fly. And that's why I'm a fan of Dash right now, because I think it is totally ready. But honestly, a lot of that, so is XRP. I think Bitcoin Cash is the one that's not quite ready yet, but it's really, really close, which means it's a good opportunity to start feeding into it. All right, so XRP on the week, so it only crossed on the 5-day, right? So we were using the 5-day chart saying, okay, it's sustainable here after this point, right? Okay. However, it had multiple weeks above. So you see, so zoom in here. So after it found support, when it met my rule, look, it zoomed above, but then came down and got your lack of volatility. See how small these candles are? That is what you're looking for. Even though 2 are red, it doesn't matter. It's closing at or above the weekly 10. You're ready to fly. So that is like the setup I'm talking about. And it's okay. You don't have to creep up to the 10 from under. So price flew above it, came back down to it, and then did my non-volatile 4 candle rule. And look what happened. Look at that setup. So it doesn't have to creep up. I just prefer when it creeps up because I can catch the move before it ever happens instead of catching a correction. But still, I love seeing retest of this coming from above, then getting lack of volatility, really smashing down the volatility, meeting my rule, and kablam. So but look at what it's doing now. Look at no volatility on these candles. Most of them are closing above the red line, which is the week, or I'm on the 5-day shit. But it's pretty close. So it flew above a little too fast. So you never met that rule. So you see this? See how this move wasn't sustained and my rule never got applied here, right? I guess technically, well, this raced up. So this candle was too volatile, so it doesn't count. You only had 2 candles without volatility at the 10. That's not enough. So the probability of that move being sustained fully was lower. But now look what it's done. So after it corrected there, because it got too volatile, too fast, didn't respect the 10, didn't follow that rule, the probability that it came back down to find support somewhere, which was actually the daily 200 almost perfectly, Now that it's found that support, look how low the volatility was at the 10. This shit's ready to fly now. Honestly, I think even before the SEC stuff, so this is XRP, even before the SEC stuff comes out, I mean, this could hit $4 easily. It's so ready. The XRP is stupid ready. I mean, like stupid ready. And sorry if you don't like the word stupid, but it is insanely ready. Okay. All right. So let's flip to Litecoin and take a look at it real quick. All right, so I think we were using the 5-day chart to use the rule of sustainability. So after this point back here, actually right here, this became sustainable. And this was the one that was on the fringes of my rule, right? So it became sustainable halfway through the down move. That's honestly not that common. That's not common at all. But it was probably making up. It was probably a late bloomer, and like all the other altcoins are already flying, and which I'm almost certain was. This is when Cardano had already broken all-time highs again. Ethereum was trying to get to 4K again, and Bitcoin was making the this was right before. This was like right around Wyckoff when Bitcoin was making a higher low type of deal, racing up. So I believe, yeah, so March, April, May, exactly. So it was kind of a late bloomer. That's why that rule didn't work there. But anyway, we know the rule had applied. We have the cross, right? So now that you actually look, it did follow the rule because it did come back down and test the orange just a hell of a lot later. That's honestly a big move. So it honestly did follow the rule. Like this move shouldn't have been sustainable because this wasn't crossed and the move already started, and it did come back down, but just much later. Like this is the oddball. So you could have lost out on a trade following that rule. And again, like I said, it's only 80% probable, but that would suck not to be in that trade with the idea, oh, it's going to come down at any moment. Didn't work perfectly. I will admit there, but it did come back down, and it's hard to trade, right? That would have been really hard to trade with that rule in mind, but you did have an edge at the beginning of the move, period, right? So anyway, so now that you finally found support, okay? So after that, you found support, the purple and orange have crossed. Here, what looked like it was really ready. But what did Bitcoin do here? Gave a scare down. So that is why Bitcoin and Ethereum are primary indicators for your altcoins, right? And if you don't believe me, let's go to the week of, so let's go to the week. So 1, 2, 3, actually, you know what? It didn't follow the rule regardless. So I wasn't even on the weekly chart. I was on the 5-day. So this is volatile. This candle and this candle only had 2. So this move technically wasn't really that sustainable, right? So it came back down, found support again. Now without volatility, you have 1 week, 2 week, 3 week, this week, wick down, 4 weeks. See how they're all small, right? Above the 10, and they're all green, even better. I think it's ready to go. Assuming Bitcoin and Ethereum don't do anything stupid. Even if they do, this week will probably just come smash down and flip right back green, and it's going to take off. So you see how low volatility these candles are? And there are 4 of them above the red line after support was found, after the purple and orange. It all feeds on each other. So this helps you not get into a move like way back here thinking it's going to go up now. And then your money is locked up for freaking 84 days. That's the value of this. You could do something else with that money for 84 days. Like go find a coin that's ready to go. It helps you identify when stuff is ready, right? So that is Litecoin. So let's go to Bitcoin Cash. And we were using the 2-day chart, I guess, for this. But then we will have to flip to the weekly regardless for that last rule for the 10. The last rule adding the 10 is specific to the weekly. But the purple orange is more specific. It's not as specific, but it has to be big time frames, right? Okay. So so this move technically started, just the 5-day. Well, yeah, so the day crossed back here. So any move after that is sustainable. It's a younger asset. All right. However, so any move now is sustainable, but you still are finding support right around the 2-day 200. Right? So it's basing off of here. See that orange line? How it based off there, launched, came back down to find support. Another launch, came back down, find support. Another launch, came back down, find support. So now that it looks like it's found support several times, okay, let's go to the weekly and just look at the red line. Honestly, I could probably take these off. All right. And it's honestly kind of creeping up. So you have one candle closure above, two candle closure above. This one, I don't know if it counts. You might have to skip that. Now, do these have to be consecutive? No. You just need 3 to 4 right above without much volatility. And this candle closure, like this candle's kind of small. This candle's moderate. This candle's small. This candle's moderately small. So you only have 2 candle closures above the 10 EMA because this one right here did not close above. So you could blast off after this candle closes in 4 days. So this weekly candle that you're seeing here, it's only 3.5. It's only halfway through. So it hasn't closed yet. So next week, then you do meet the 3-week rule of closures. Next week could get hot, but the probability of it getting hot next week is less so than an asset than if this candle had closed above. So if next week doesn't fly, but it does close above, that simply gives you better statistical probability that the week after, now that it's completed the 4-week rule or 3 to 4 week rule on the high end, you have a very strong probability that the next week will fly after you have 4 candle closures. Am I making sense here? Am I making sense? I honestly don't know if I'm making sense to especially newer folks. So so let me know in the comment section, and honestly leave me a comment, even if it's just like LOL you suck or quack if you're here a BPro fan but you just want to see my videos, you know, like give me something like your favorite coin, whatever. It will help me continue making videos for you. I do promise that. And also if you haven't flipped your phone, you get flipped off, hit like for me. And on the way out, look, new viewers, check out these 2 videos. I'm telling you, they can drastically increase the profitability of your crypto journey if you just watch them, but you have to take that first step. And before you go, hit that bell. So a lot of this stuff is time sensitive. The stuff I covered, the content that I covered today isn't. However, a lot of the things I do. So help me help you have a profitable crypto journey. Hit that bell and we'll see you on the flip side.